Kevin Green, senior markets correspondent here on Schwab Network, joins me now to help set up the action today. All right, let's talk about the Fed decision first, right? It met what consensus expectations were. But I thought what was surprising to me, and I'm curious to know if this was surprising to you, the fact that there was only one dissent in terms of the size.
Yeah, not really too surprising here. I mean, if you look at Waller and Bowman, they were really dissenting for 25 basis points in the previous meeting. That's exactly what they got in this meeting here. So they did not go a little bit more aggressively when it came to this particular cut. And then that left with Stephen Myron, which, as you kind of talked about, went with the very aggressive cut to the downside, that lone dot at the bottom of the dot plot here. What was actually very interesting is the summary of economic projections. We did see a slight re-rating to the upside when it came to GDP growth, but also kind of talking about the concerns around inflation as well as the labor market. In fact, Jerome Powell also made some comments saying that this is kind of a unique balance, if you will, when it comes to labor because of the immigration policies that are taking place, artificial intelligence, participation rate kind of inching up here a tad bit here, and not really knowing and saying the Fed really doesn't know where we are going to see labor kind of go as far as the direction over the next couple of months here. But the market obviously did price a lot of this in. You are seeing some up arrows here in today's session, not only because of the Fed cut, but also because of some other news here. And we'll wait to see what happens in the October meeting. It does appear that the Fed has another 50 basis points on the table for the remainder of this year. And that's really what the market's really kind of pricing in. Now, you are seeing yields kind of re-rate a little bit to the upside when you're looking at the longer end of the curve. I think if you're looking at the 2026 cut cycle that the Fed has in the summary of economic projections, maybe a little bit less cuts than the market priced in here, but we know that dynamic can change over time as more data kind of comes in here. So once again, a decent Fed meeting day, some intraday volatility, but we did pin at that 6,600 level at the close here yesterday, and obviously seeing some green on the screen for this morning.
So KG, for people who aren't caught up, we know the dots are anonymous, but essentially you know what they are, as you mentioned. Clearly that's Myron in a certain position, but 9 of Fed members essentially see 2 more cuts, 2 see 1 more, 6 see none. So is the way the market is interpreting this, because the leaning is on the side of 2 more, that's how it's being interpreted and why we see investors in a buying mood this morning?
Exactly. And I think, I've saw some commentary over the last 24 hours or so, Diane, talking about the median dot plot and Stephen Myron's vote yesterday for aggressive rate cuts. That really did not have any impact on the median dot plot, if you will, right? That's where the majority of members, the level that the majority of the members see towards the end of the year is the median, not the average. And so I think the market is okay where we are right now when it comes to the rate cutting policy here. And unfortunately, we probably are still going to be within this regime of bad news is good news when it comes to the labor market. If the market does kind of desire more rate cuts in 2026, I think the big risk that you have is that maybe the labor market statistics over the next couple of months kind of re-rates higher or gets a lot better. That's not something that's outside of the norm. We did see this in September and October of last year, and that's where we started seeing the Fed kind of pull back on the rate cutting expectations as inflation started to move back to the upside here. That could also happen this time around. If you're looking at it, services inflation is really going to be the big risk that you have. Wage growth is still at an elevated rate, sitting at 0.3%, a little bit hot here. Some goods inflation kind of transmitting through the economy right now, also kind of eating into margins. So there's still a lot that is there when it comes to the outlook for 2026. But for now, if you're kind of looking at the remainder of the year, are we expecting more rate cuts? No. Market says, okay, we're done with the Fed, and then we'll focus more on the economic data as well as some of the fundamental data and the news headlines that are coming out of companies like Nvidia and Intel.
Okay, that's a great tee up to Nvidia, Intel up nearly 30% this morning. Nvidia moving higher as well. Let's catch people up to what's the latest trigger here.
Yeah, so we are seeing Nvidia announce a $5 billion investment into Intel with the per share price of around $23.28, and then also announcing some partnerships or trying to integrate some of the Intel product offerings with Nvidia's product offerings. And some of these integrations include the NVLink, which is going to be able to improve the communications between the GPUs for Nvidia and the CPUs that Intel has. Intel is also going to be producing and designing some CPUs, if you will, to better integrate with Nvidia's system. So not only focusing on personal computing, but also on the data center aspect of their business here. This comes on the back of SoftBank, once again, for Intel. Investing around $2 billion. That was announced a couple of weeks ago, and the U.S. government investing $5.7 billion. So there's individuals and companies that are putting dollars to work, putting it into Intel. This is more of a national story, if you will, trying to save this business in a sense, especially the foundry side, in order to bring back domestic production or try to increase and ramp up domestic production for chips. I think this is a nice first step for right now. And this also is being perceived as, for Nvidia, I wouldn't say, putting money to work in order to appease the administration. Maybe this kind of loosens up some of the restrictions on selling the advanced Blackwell chipsets to China. That also could be the case as well. A very small outlay when you're looking at Nvidia's dollars being put to work when it comes to Intel, but I think the gesture itself probably carries a little bit more weight, which is why we are seeing Nvidia up around 3%. Usually when you see these type of investments, the company that's doing the investment doesn't really see a pop because of the investment. There's nothing, So that's kind of the angle that I think a lot of investors are looking at when you're looking at Nvidia. And then if you're seeing AMD down about almost 5% right now, so they haven't been a part of the party. It seems like the market's kind of taking it out on them and kind of diverting dollars back into Nvidia and Intel.
Okay. All right, and then I know you're across bullish, those shares moving higher, newly public or recently public company. Looks like this quarter of reporting is better than expected. What are some of your takeaways here?
Yeah, we are seeing, this is the first report since the IPO here, and we are seeing the numbers coming in better than expected here. Q2 results, revenue came in at $57 million. That beat the street's estimates of $55.8 million. That is actually lower than year over year, though. This time last year, revenue came in at $60.7 million. Digital asset sales coming in at $58.6 billion. Trading volume also coming in at $179.6 billion here. And average daily volume, if you will, actually increasing on a year-over-year basis. So beating the street's expectations. Once again, first report coming out over time. Next 3-4 quarters, analysts will be able to kind of readjust and kind of get a foundation or a baseline for these metrics. But coming out of the gate pretty hot here when you're looking at their guidance moving forward, and that's why we are seeing the shares advance in pre-market trading.
Yeah, you're seeing a little bit of analyst activity around this one. Deutsche Bank raising their price target to 56 from 51. They've got a hold rating, though, which is no surprise to a newer public company. Rosenblatt is maintaining a buy. They are raising their price target to 62 on this one. All right, KG, let's talk the levels you're looking for on the S&P 500 today. So although lost a little ground, the S&P 500 held the line at 6,600. So where do we go from here today to the upside and the downside, KG?
Yeah, to the upside, 6,660. To the downside, 6,000 is going to be your area of support. Just be mindful, Diane, there's a long-term 14-year trend line. If you're taking the highs, that is an area of resistance. 6,660 is that area of resistance for that trend line. So let's see how the market actually resolves that over the next couple of days and weeks here. But market's build up right now.
All right. Thank you, KG. That's our Kevin Green, Senior Markets Correspondent. Appreciate the breakdown and especially that look into the Fed and how that kind of plays out.